Registered under the Securities Exchange Act of 1934 via Form BD, the broker-dealer operates under one of the most demanding compliance frameworks in financial services. This framework includes FINRA membership, daily net capital computation under Rule 15c3-1, and critical customer asset segregation mandates under Rule 15c3-3. Today, we examine the dual-agent principal structure, the regulatory architecture from registration to blue sky requirements, and the conduct standards of regulation best interest. We will also cover SIPC protection up to $500,000 per customer, ensuring you understand the foundational entity of the U.S. securities market. A broker-dealer is a person or firm engaged in the business of buying and selling securities, acting in both capacities depending on the specific transaction. When acting as a broker, the firm facilitates transactions as an agent, earning a commission for connecting buyers with sellers without taking ownership of the securities. When acting as a dealer, the firm buys and sells for its own account, taking ownership into inventory and profiting from the spread between acquisition and sale prices. This dual designation reflects reality. Most firms perform both functions. A firm might act as a broker for an NYSE trade while simultaneously acting as a bond dealer. The broker-dealer is the primary vehicle for primary market offerings, secondary market access, investment banking services, and the essential market-making function providing liquidity. Understanding the nature, regulatory obligations, and operational structure of broker-dealers is essential for every securities industry professional and compliance officer today. Regulation is a multi-layered framework involving federal laws, SEC rules, self-regulatory organization mandates, and state blue sky laws, requiring simultaneous satisfaction of all layers. The Securities Exchange Act of 1934 is the primary statute. Section 15 requires anyone affecting securities transactions for others or themselves to register with the SEC. SEC registration involves filing Form BD, requiring detailed disclosure of ownership, business activities, financial condition, and the legal or disciplinary backgrounds of its control persons. FINRA is the primary self-regulatory organization. Membership brings comprehensive conduct rules, financial requirements, and strict supervisory obligations, including periodic examinations of all member firms. State blue sky laws also impose separate registration requirements. Most states utilize the Central Registration Depository to reduce administrative burdens while preserving vital state oversight authority. One of the most significant requirements is the Net Capital Rule, SEC Rule 15c3-1, designed to ensure firms maintain sufficient liquid assets to meet all obligations. Firms must compute net capital daily, subtracting deductions and haircuts from liquid assets. If capital falls below minimums, the firm must immediately cease securities business. Firms use two methods: the aggregate indebtedness method, where debt cannot exceed 15 times net capital, or the alternative method, requiring 2% of aggregate debit items. The Customer Protection Rule, SEC Rule 15c3-3, requires firms to maintain a special reserve bank account and maintain physical possession of all fully paid customer securities. SIPC provides insurance against firm failure up to $500,000, with a sublimit of $250,000 for cash. It is not market insurance. Under FINRA Rule 3110, firms must establish written supervisory procedures and designate personnel to ensure compliance. Associated persons must also pass rigorous qualifying examinations like the Series 7. Regulation Best Interest, effective in 2020, requires broker-dealers to act in the retail customer's best interest, mandating clear disclosure of conflicts via the Form CRS. In summary, a broker-dealer acts as agent for commissions and principal for spreads. They must satisfy net capital rules, protect customer assets, and always adhere to Reg BI standards. Mastering these core points is essential for passing your securities exams. Stay focused on the statutory mechanics and the dual capacity of the modern broker-dealer.